Very good afternoon friends. This is our third video in the series of Budget 2023, and in this video we would analyze some of the key proposals of Budget 2023, some of which have seen the fine prints of the budget but was not included in the Finance Minister's speech. So for trade and industry, first major amendment in income tax is that section 43B now includes payments to MSMEs to be allowed as a deduction on payment basis in case they have not been done as per the MSME Act timelines. That is, in case there is an agreement with the supplier, then the payment should be done by the timeline as per the agreement or 45 days, and if there is no agreement, then the payment should be done within 15 days. If the payment is not done within these days, then the payment to the suppliers who are registered under the MSME Act would be allowed as a deduction on payment basis under section 43 capital B of the Income Tax Act. While this is considered to be as a social welfare measure in the budget 2023, all trade and businesses have to revamp their payment cycles and have to take cognizance of this so that no deduction is left out, and this is applicable from the coming assessment year itself. Therefore, the change in business processes are needed. Another major amendment for businesses is the amendment of section 142, wherein an officer during the inquiry period can suggest to revalue or value the inventory through a certified cost accountant, and the valuation period would not be counted under section 153 timelines. Friends, very important that in case certain other material is also unearthed during such valuation process of inventory under 142, then the same might be taken up during the assessment stage itself. However, opportunity of being heard would be given to the said assessee. Now, this is a very important amendment, and industry should be prepared during assessments to get their valuation of the inventories done. Another important amendment is the removal of the word residents from section 56 to 7B. So now, in case shares are issued at more than their face value to even non-residents, there also section 56 to 7B would be applicable. Section 54 and 54F have been amendment to provide that in case the property which is purchased or constructed within 1 year before the sale of the property or 2 years after or 3 years after the sale of the property, then the said capital gains on the sale of such property would be allowed as a exemption under 54F only in case the value of the new property is less than rupees 10 crores. Further, section 10, subsection 10 capital D has been amended so as to provide that the amount received on insurance claim on death would continue to be exempt, but in case it is received other than by way of death, then in case in any of the previous years for one or more policies the premium paid is more than rupees 5 lakh, then the exemption under 1010D would be kept to the extent of such policies where the aggregate of the premium which is paid is amounting to 5 lakh rupees threshold. Friends, we have all heard the finance minister speak about personal income taxes, and it looks like the aim of the government going forward is to bring about, like in the foreign countries, a no exemption regime under income tax. There are 4 benefits which have been provided under personal taxes, but all the benefits are provided to taxpayers who are registered under the new scheme of income tax which was introduced last year in the budget. So, even the new regime of income tax would be considered as the default regime, and possibly going forward the option which is now available to choose the old regime would also be taken away. So, the reliefs under the new regime in case of personal taxation are 4 as follows. First, the exempt limit under the new regime is increased from 5 lakhs to 7 lakhs, while the rebate under section 87 capital A route. Therefore, in case a taxpayer is under a new regime, then up till 7 lakh rupees he does not have to pay any income tax. The number of slabs of income tax have been reduced to 5. So, actually the 25% slab has been removed. Now, the new slabs under the new regime are 0 to 3 lakhs exempt, 3 to 6 lakhs 5%, 6 lakhs to 9 lakhs 10%, 9 lakhs to 12 lakhs 15%, 12 lakhs to 15 lakhs 20%, and more than 15 lakhs it is 30%. The highest rate of surcharge for new regime taxpayers, which was 37% in case the income was more than 5 crore rupees, has been scrapped. Therefore, the maximum surcharge as of now is 25% for income above 2 crores. To top it up, a standard deduction has been introduced for taxpayers with income of more than 15.5 lakh, but again this is only for those taxpayers who are listed under the new regime. We know that for taxpayers who have a business income, they can opt for a new regime and opt out only once. However, for salaried taxpayers, they can opt in and opt out every year from the new regime to the old regime and from the old to the new every year while paying their taxes. We have all seen that there are a huge backlog of cases pending with the CIT appeals, and very recently the Income Tax Department had also issued an instruction wherein it has directed the CIT appeals to dispose of the cases within a time frame. However, the case load has not reduced, and therefore for the taxpayers under litigation, as a welcome move, a new Joint Commissioner of Appeals has been introduced who would be taking care of the appeals below a certain threshold limit. While this would help and it is a welcome move for disposal of the old pending cases, yet it has to be seen that the cases are disposed of after giving opportunity of being heard and after passing speaking orders. Otherwise, the tribunals would be loaded with cases where non-speaking or other adverse orders are passed in meritorious cases also. Section 194 capital R and read with section 28(4), which is the pain point of the industries at large. Section 194R, TDS at the rate of 10% on benefit or perquisite was introduced in the last budget, and thereafter 2 circulars have been issued, yet it remains a pain point. The pain would further increase post this budget, I would say, because there was a doubt amongst trade and industry as to how TDS could be applicable on cash incentive. When one is paying cash, then how it could be recognized as a benefit or perquisite. Specifically in case of discounts too, post-sale discount, it has been argued as to how it can be a benefit or perquisite. However, it has been clarified and it is proposed that an explanation would be inserted not only in 194R, but also it is clear from 28(4) that even cash incentives would be liable to TDS under 194R and would consequently be leviable to income tax under 28(4) for the recipients. TDS under 194BA on gaming has been introduced at the rate of 30% in the line of TDS under 194B and BB on gambling, betting, horse racing, etc. So now online gamings, even in case they have not distributed the benefits from the gaming, but at the year end would have to provide for the TDS, and in case there is a withdrawal during the year for the benefits of the gaming, then TDS would have to be deducted on such withdrawal itself. Friends, a major amendment which was not expected under GST, no input tax credit would be available on goods or services received by corporates, wherein such goods or services have been received by such corporates on account of CSR expenditure incurred as mandated by the Companies Act 2013. Now this is in line with the amendment done in 2015 in the Income Tax Act, wherein it was notified that CSR expenditure would not be liable to deduction under income tax also. This would be a hit. The question is that whether it would be retrospective or prospective, that has to be dealt with going forward. There are many other amendments in the fine prints which we would be discussing in our webinar tomorrow at 9 AM sharp. So please do join. However, to end with, many customs duties have been reduced on many raw materials imported, and some customs duty for import of finished goods have been increased. These would be applicable from tomorrow, and hence one should go through the fine prints of the budget to see the impact. Thank you very much for your patient hearing, and do like, share and subscribe to this channel, and stay tuned for maximum dissemination of knowledge. Thank you very much.